Hi, I'm Kals, and I'm the host of The Comparable. The Comparable is a series that seeks to uncover the journeys and stories of startups in emerging markets. But instead of looking at one company and one market, basically in a siloed way, we're going to be looking at two side by side in order to showcase the commonalities, but also some of the nuanced differences of both markets, as well as the stories of the founders building these market-creating innovations. The hope is you walk away learning more about what it takes to build in these incredible but challenging places, with lessons on what to do and what not to do. For our very first episode, we're going to be diving into a really exciting sector globally, electric vehicle mobility, and specifically for emerging markets, electric vehicle mobility for two-wheelers. And we're going to be focusing on two markets that are same but different, as we always do, looking at Pakistan and Nigeria. These countries actually have a lot in common, very dense populations, fast growing, high consumer base. And from an EV perspective, there's a lot that's really interesting here. In Pakistan, we're actually the sixth largest market in the world in terms of motorbike ownership, 17.5 million motorbikes on the road, according to one statistic that we found. And Nigeria is similar, about 5.1 motorbikes on the road, making it the largest in terms of motorbike ownership in Subsaharan Africa. When you couple that in terms of two-wheeler ownership and that opportunity with the fact that EV mobility is becoming something that is global, right? It's a conversation that we're having when we're talking about reducing carbon emissions, when we're talking about climate change, but also in terms of rising gas prices and the need to convert to EV. That's something that we're seeing take place globally. In emerging markets, it's something that we're seeing also roll out. And Pakistan and Nigeria are actually quite similar in terms of the opportunity, with governments that are basically stating intentions to reduce carbon emissions, to change to EV, basically changing vehicles to electric vehicle by a certain date. At the same time, their challenges are also quite interestingly similar in terms of policy challenges that exist, even though you have national policies that are in place in both countries, still seeing some barriers to that. Infrastructure challenges, roads, things like that are all leading to why it can be a really exciting market to build in, but also really challenging places. We're going to be focusing on this episode on two companies that are building in Nigeria and in Pakistan. We're going to be focusing on Max, which is Metro Africa Express, or Max, which became Africa's most funded startup in the EV space when they raised $31 million in Series B funding. They're currently building in Nigeria, but for the rest of the African continent, are scaling across that. We're going to be sitting down with Adetayo Bamiduo, who is the co-founder of Max, and along with the co-founder of ezBike, which is, disclaimer, one of our portfolio companies at Adetayo Ventures. ezBike is one of the early players in the Pakistani EV two-wheeler space, not the only one, but also one of the first movers in that space. We invested in their seed round, and while their traction is relatively slower, just given capital constraints in the market, some of the similarities and the challenges are quite telling about the space. We'll also be featuring a segment called Investor Insights, where we sit down with the key investor, one of the key investors in Max, who is Brian from Novastar Ventures, as well as me, because I'll be talking about the ezBike angle as well. And we'll be talking about the market opportunity, why we invested, how we've seen the evolution of these two companies over time since we wrote the check. So sit back, and I'm so excited to bring you the first episode of The Comparable. Hi, I'm joined by my guests, two founders who are both building in the electric mobility space in their respective markets. Adetayo Bamiduo is the co-founder of Metro Africa Express, or Max, which became Africa's most funded startup when they raised $31 million in Series B funding in 2021. That funding, along with a lot of international partnerships, allowed them to realize their vision of achieving EV transformation across the African continent. My second guest is earlier in his journey, but boasts a similar vision. Ali Moeen is the co-founder of ezBike, which, as a disclaimer, I am an investor in, which aims to revolutionize electric mobility in Pakistan. They've raised seed funding and have been rolling out EV two-wheelers, both retrofitted and their own EV bikes, along with battery swapping stations in Pakistan. Despite being in different parts of their journey, I think their stories are really interesting, and I'm really excited to have them here today. Welcome to you both. I want to talk a little bit about the journey for both of you in terms of, I think both Max and ezBike back then, and ezBike was actually called Roamer back then, didn't look like what it does today. And I think that's the beauty of building businesses, and but also especially building businesses in our markets, right? Where you have to adapt constantly to what the realities are in front of you. And I'd love to start with you, Tayo, in terms of what is the snapshot of what your initial vision was with Max versus what it is today? Has it changed, or has the vision actually stayed the same? The business may just look different.
Yeah, that's a good question. I think the motivation has remained the same, right? The cause has remained the same, but if you zoom into the business itself, the business model, the strategic focus, that has definitely evolved quite a bit. At the very beginning, obviously, I and Trinity wanted to do something in mobility. We wanted to digitally transform the industry, use technology to organize the industry, make it more efficient, bring in more transparency. But then the focus from a product strategy standpoint was building out a marketplace, right? Or similar to on-demand platforms, leading platforms, and all of that. But I think about 3 years in, we realized that the biggest pain point for our micro entrepreneurs and gig drivers was really about getting access to the vehicle. So it was a bit of a struggle initially, to be honest, because then you would have things from VCs are very smart people, so not throwing any shots at VCs right now. But then you would have stuff like Uber is the biggest taxi company in the world, but they don't own a single taxi. Airbnb is the biggest hotel company in the world, they don't own a single piece of real estate. So everyone was like super excited around the world with asset-light models. You would hear that often, right? Uber of this, Uber of that, Uber of this. And the reality of the market that we were in was very different. Needs were very different. The demographic was different. And so there was a little bit of a struggle, right? Because if you think about it, the whole VC model obviously came out of the US, right? And so if you're building a technology-driven business, there's in other markets outside of the US, there's still a high likelihood that you want to import a lot of the ideas and frameworks or that VCs have deployed and tech companies have deployed in the US, in Asia, Africa, and so on. So it was a little bit of a struggle initially to recognize that with the same concept of building a technology-driven company that will ultimately scale, but the demography and the use case and the customer needs actually are very different. And the company should, of course, fundamentally be driven by the market opportunity and the market need and the problem statement, rather than trying to replicate some proven model out of the US. So we had I'd say about an 18 to 24 month transition / struggle period. We just said, you know what, this is what the customers want. This is what they need. If you're really here to build a company and not necessarily just to tell a nice story that maybe fundraises a couple of rounds but doesn't really deliver any real transformation, which isn't what we wanted to do. We wanted to actually solve a real problem. We then made that decision to say, you know what, let's pivot into a company that would ultimately solve a really important local problem. Now, we did that, and we haven't looked back since.
Yeah. And if I can summarize what you just said, I'm sure there's been so many more pivots that aren't talked about in the media. I think the reality of building a business is you're constantly, and I wouldn't even call it pivots because that feels quite dramatic. I think any entrepreneur constantly is tweaking what they're building. But just to summarize what you said, is that you guys started as a logistics company in 2015, the Uber of what you guys were building in Nigeria at the time. From what I was reading, you were offering a 3-hour delivery service via motorbikes to support small businesses, online merchants, and corporates. You pivoted to ride hailing, as you mentioned. So that was maybe the Uber model in 2017. And then later pivoted to electric mobility and infrastructure in 2019. And then obviously then we see in 2021, you raised $31 million. So it's like you were off to the races then. And so I'm curious in terms of the decision to go electric, because that is, I'm going to get into that with Ali as well, right? Because it's also like a big decision when this is a space that is relatively new, especially in 2019 in Nigeria at the time. I'm assuming there were things happening, but like it's still a relatively nascent space in emerging markets. So curious about the transition and the pivot from what you guys were building in the mobility space, and not pivoting, but like kind of that layer of electrification.
Yeah, sure. Happy to talk to that very quickly. And a lot of people actually would be surprised on some of the motivations behind the pivot to electric. Or most people will think, okay, it's because we want to reduce emissions, which is true, but I'll actually give you some very interesting reasons why we did it. One is this: when you're building in an emerging market, there's a tremendous amount of chaos in the ecosystem, right? Or so when you compare an ICE engine vehicle with an electric vehicle, right? Which is easier to manage, control, remotely disable, remotely deactivate, well, which is harder to steal, right? So EVs are actually way more secure and way easier to manage from a complexity standpoint, much more difficult to successfully steal. That's actually a big motivation for us. The second for us was around the revenue streams, right? So on the ICE engine model, internal combustion engine model, when we provide the vehicle subscription or rental to our customers, right, we only generate revenue from the vehicle that we provide to them and maybe a bunch of other services like insurance. But with EVs, we generate revenues from both the vehicle and also from energy, right, which is the battery charging and the battery swaps. That alone are essentially doubled our revenue per user. So moving the driver or customer from ICE engine to electric essentially doubles revenues for us, right? Which is obviously a fantastic reason to pivot, right? So there's one other one that I was going to say, just escaped my mind right now. But I would say overall, it's around the fact that, yes, it's LTV. We run a subscription to own model, which means after an 18 to 24-month period, the ownership of the vehicle transfers to the customer, right? We provide that as an incentive for them to stay on the platform. But with EVs, right, even when the vehicle excluded the battery, of course, right, when ownership transfers to the user, they continue to depend on us perpetually for energy, right? So the lifetime value of a customer is way higher than on the ICE engine model. For LTV reasons, for retention reasons, for revenue per customer reasons, and for operational complexity reasons as well, portfolio quality reasons, EVs way better than ICE engines. So that was really the key driver behind the pivots.
Yeah, Ali, I want to go to you because you mentioned that you actually also started in ride hailing in the mobility space and pivoted to where we are today. Can you share a little bit about what that initial vision was for ezBike, which was at the time known as Roamer? Has it stayed the same? And then obviously the mechanics of what you've been building is different. Can you share a little bit about the pivots that happened along the way to get you to where you are today?
Yeah, I think the vision's been the same. We want to have an impact on mobility in general. But again, as you said, Roamer was a quasi ride hail / short-term rental service. And in hindsight, I like to give myself and Hadi a little bit of credit that we recognized it wasn't that great an idea now in hindsight. And because of players like Uber and Kareem being in the market, the timing actually of our pivot, which is again driven by COVID, really turned out to be pretty good. So 2020, COVID happens and the government of Pakistan suspends all ride-hail companies, all services. And so we have no business all of a sudden. And this is mid-March. Hadi and I had this conversation. What are we going to do? We've got a little bit of money that we raised from some friends and family, and there's nothing we can do with it. And luckily, we'd been on the back burner working on an electric bike category. We were thinking about adding that as part of the Roamer platform at that point. And it's interesting that Tayo mentioned this. The reason we picked electric bikes was because we couldn't figure out how to stop fuel theft from ICE engine bikes, and we couldn't figure out the security. So our natural inclination was this has to be electric because there's no way we can stop fuel theft and immobilize the bike and a whole lot of other stuff that we wanted to do. We decided the only issue at this point was Hadi and I are both not engineers, and we didn't know the first thing about electric bikes. So we decided, let's just get a handful of them built. I can do the technology. So we very quickly built a ride sharing platform, and we decided to put some bikes out there and see what happens. How do people use these? How do we make these? How do they work? How can we re-engineer them? And how can we make them for Pakistani roads and for the Pakistani people? And we didn't think a lot of people would use us, quite honestly. Then all of a sudden we were in the news, and apparently everyone was talking about this new bike sharing service called ezBike. Is the first of its kind in Pakistan. So we were getting coverage from all sorts of media outlets, and we got a lot of coverage, a lot of users, and it became profitable and became a distraction, quite honestly, because the goal wasn't to run a bike sharing service. The goal was because we knew that we'd never be able to scale that in Pakistan. The goal was to have a larger impact on mobility. And then 2023 is when we decided we've got to shut down the bike sharing thing because it's taking way too much time from the core business. That's really been the journey. And of course, there's been pivots within that as well. And I wouldn't call them pivots. I think you've got to change based on market dynamics. Pakistan has evolved a lot over the past couple of years. So 2 years ago, we were building these bikes. We would build the full bike and sell them. And then we realized with the economy, with the global macro going out of whack, and then the Pakistani economy kind of tanking, we realized people just don't have the money to buy an entirely new bike. So what's the next best thing we can do? The answer was pretty simple. There's 28 million motorcycles on the road. We can just start converting those and save people some money. So of course, there's scale issues with that as well. I feel that given that we're in Pakistan, you've got to have the ability to evolve very quickly. And you can't fall in love with the product you make. You just can't do that, because then that can get you into a lot of trouble.
Yeah. And I think it's interesting because you were mentioning about battery swapping. There wasn't really, you partnered with a player that was building battery swapping stations, but it's such a, when you're building your own sector, right? And Tayo, I want to hear from you as well. It's like it's like a chicken before the egg, right? It's like you recognize that at scale, and if all things were true, this commercially makes a lot of sense. But you also have to build the infrastructure around what you're doing. The regulations have to make sense. We have to think about what import looks like if you're importing parts for what you're doing. And so I'm curious for you, and I'll ask you, Ali, as well. It's you guys had to basically deploy battery swapping stations yourselves for the bikes that you guys were putting out on the road. You partnered with Tesla, but not the Tesla. There was a Pakistani company called Tesla. So you partnered with them. That was the first swapping stations that you put out. You tested out a lot of different things. And I'm curious about what have been the biggest challenges you faced from an infrastructure perspective in Pakistan. How are you working alongside not just other service providers, but also other EV players to basically move the sector forward?
Yes, that's a really good question. I think the biggest challenge we faced in Pakistan particularly is the lack of engineering talent. So unfortunately, Pakistan doesn't engineer a lot of stuff. We're a very import-driven economy. We would much rather just import stuff. And our regulation is set up where imports are incentivized and making in Pakistan is disincentivized. It's unfortunate, but that's the way it is. And it's the way how solar works. You import solar panels, there's no duty. But if you figure out a way to make them in Pakistan, you've got to pay full GST on them. I think our biggest challenge was the complete lack of engineering, particularly in India and Islamabad, where we were at. And initially, we tried to work with people who we thought were experts. And invariably, we've come to the same conclusion that we're better off doing it ourselves. And it's not because people have acted in bad faith with us. People have always acted in good faith. It's just that people don't necessarily have the capability that they boast about. So as you said, our first set of swapping stations, we had this company called Tesla Engineering build them. And then very quickly, we realized they're great guys, but we want to do it faster. So we started building them ourselves. And my thing is, how hard could it be? It can't be rocket science. So we started building them ourselves. And it actually isn't rocket science. It's pretty simple. There's going to be challenges when it comes to building the infrastructure. And then there's challenges with regards to deploying that infrastructure. And one of the reasons why we started making them ourselves is because we wanted to make smaller swapping stations. We used to call them swapping pods. And we realized that the bigger ones you couldn't deploy because the municipality or the government owns all the land and they're not giving you land. They just won't give you land. So that meant we'd have to go rent property. And then once you do that, then battery swapping just doesn't make any sense because you don't have that much margin and property is expensive, particularly in Islamabad. So we decided that we were going to run a merchant network similar to a network that was run by a fintech called ezBike in Pakistan, where we would build these smaller pods that could be placed at any grocery store. And so you have a whole bunch of merchants and you could just place them at stores and give them a slight incentive. And it's ridiculously easy to deploy because you give them enough money where they're incentivized to put that small thing in their facility. And then what you can also do with these smaller pods is you can get more density as well. With a station, you can have one and then you have to go 5 miles and deploy another one. But with the smaller ones, deploy 3 of them within the same vicinity as well. So it's a much better user experience as well. And then, of course, finally, there's regulatory challenges that is something we're working on. We're working on with a number of other EV manufacturers in Pakistan where, we have serious concerns when it comes to policy. So we're taking up with the government of Pakistan.
But I first want to go to Tayo because I'm curious if any of the pains that we have faced in Pakistan resonate for what you've experienced in not just Nigeria, because you guys are expanding across Africa, but maybe let's start with that, is how have you guys had to build, were you guys, as you guys were probably early EV players in your market. So I'm curious about what the infrastructure looked like back when you guys started in 2019. How activist did you have to be about building the literal and figurative road in front of you?
Yeah, I mean, there was not much in the ecosystem. So we had to start with the narrative, right? Talking about why EVs made sense, etc. I would even say that when we started initially, our gas was subsidized in Nigeria, right? So that meant that from an energy cost standpoint, EVs weren't necessarily the most competitive, but we bet on the fact that ultimately subsidies would have to go away because we knew the government couldn't sustain them. They were running out of money. It was a matter of time before people would have to pay the true price of gas, right? And that then happened 2 years ago. The moment that happened, then everyone started talking about EVs. But thankfully, we have been working on EVs for the last 3 to 4 years. So it's really been a journey, right? We did a lot of work in advocacy. R&D work as well, trying to figure out the right kind of vehicle specs for the Nigerian market. Because when you sell a product like this, or virtually any product in frontier and emerging markets, especially if you're selling to the mass market, you're always balancing between affordability and quality, right? That in itself took us a while to really figure out the right kind of EV at the right price point that would make it affordable for the customer base that we were targeting. So a short answer is we did a lot of work on advocacy and market education and research. And also I would say that some of the learnings we had from our previous business model with the marketplace model, right? Being Uber for three-wheelers or three-hour delivery and all of that. In those other business models, we were also pioneers in Nigeria, right? And I think earlier, as a younger founder, it's always very exciting to pioneer a business model, right? There's so much excitement that comes from it, and you get a lot of press time, and all that stuff that comes with it is nice. But you also spend a lot of money. It's extremely exhausting. It's challenging, right? You're the first to experience a lot of those challenges, and then everybody else waits for you to experience all the craziness. And then once the market gets to a meaningful point, and you see all sorts of competitors coming in, right? By then, you've run out of steam, right? Everyone else learns from you and then they overtake you, right? So when we made the pivot to EVs, we were a little bit more strategic this time, right? Doing our research, stayed ahead of the game, but not necessarily burning a lot of capital yet. So the transition for us wasn't sudden, right? It was progressive. And I'll go as far as to say that before we started accelerating, we waited for a few other innovators in other value chains, right? In different value chains of the entire EV value chain, because the EV value chain has about 6 or 7 layers, right? We knew we couldn't pioneer all of those layers at the exact same time. We didn't have the time, the energy, or even the resources to do that. So what's happened about the last couple of years for us was we waited for the right partners in the value chain that brought in complementary capabilities before we then started dialing up. And that has worked really nicely for us.
That's really cool, because I feel like sometimes when you see companies that come up in certain sectors, sometimes the reason they don't work out is often because they were too early for their market. Like for you to think about what are the different factors that have to be in place in order for us to be able to be successful, which I think is cool. And actually, as you were talking, Ali, I was seeing you were like smiling and nodding. Is there stuff that's resonating with what you guys have experienced with ezBike so far, even though it's much earlier than where these guys are?
Yeah, definitely. Of course, these guys are way ahead in their journey than we are, but I would consider us as we came into this market very early as well. I think we were like this first or second player in EV.
Yeah. Now there's so many.
Now there's so many. Yeah.
And tons of Chinese products, of course.
Yes. It's mostly Chinese companies, Pakistani frontmen. But yes, we were early, but that's given us the opportunity to test out stuff, to learn. There's a massive learning curve involved with EV. So we've tested out not just the hardware, but also consumer behavior. And that's, so yeah, I think if we had come in maybe 2 years ago, it was still a slightly more mature market as opposed to what 4 years ago. But the learnings from the last 4 years really set us apart from most other companies.
I want to talk about the expansion piece of what you've been building, right? Because right now with Ali and ezBike, these guys are in Islamabad and Bindi, which is the Twin Cities capital. Very different demographics from the rest of the cities in the country. So I'm curious about, for you, what was key to your decision making to expand from your first to your second city, your second to your third city? Like, how did you guys make those decisions? And then when you think about different countries that have different policies and attitudes towards EV, how has that impacted your growth trajectory?
Yeah, the motivation for expansion was pretty simple, right? It's initially, to be honest, it was growth. And then that evolved into, okay, profitable growth, but still, right?
Sorry to interrupt you, but I'm curious, like, was that also guided by the fact that when you guys raised your Series B funding, and also that was in the height of 2021, it was like a ton of capital flowing to these markets. Was that also pressure from investors to grow, or was that you guys?
I'd say, I could say pressure from investors, but actually the pressure from investors is because in the first place, we sold investors a story of growth and expansion.
Okay.
So it's ultimately set in this pressure. So we wanted to take over the continent. Obviously, we saw an opportunity to replicate the model across other cities and other countries. And we knew, of course, we needed to raise capital to do that. But of course, and I think founders ultimately, after a while, realized that funding is, 20% of what you need to succeed. Or you need to build the right tech, you need the right team, you need the team that's capable of executing at a different level. You need a team that's constantly reinventing themselves and learning at the exact same rate or even faster than the rate at which the company is growing. So there's a bunch of other complexities that we, to be honest, started like figuring out after we had raised that, wow, okay, it's not just to really expand here. We need to expand the quality of our infrastructure. We need to bring on board new partners. We need to build out a more elaborate FP&A system to figure out how each city actually is doing, and all of that, performance management system, and then all the boring stuff that we left behind in large corporates. The reasons why you don't want to stay in a big company because they do so much boring stuff. You then figure out as you start scaling that, hey, okay, now we have to start doing all that boring stuff that I ran away from when I left those big companies. So there's a massive learning curve that comes in. Otherwise, if you don't do a lot of that as well, you run out of money very quickly. You burn all that capital and you really can't point to any real value that you've created. So I'd say the expansion was driven by obviously a vision and a dream we had sold, which was legitimate. But of course, when it was time to really execute and go from city 2 to 3 to 4 to 5 to 6, then you start facing all of those really challenging growing pains. And of course, if you're doing this in mature markets, it's hard. If you're doing this in frontier markets and emerging markets, it's 10x hard.
Mm-hmm. Yeah. And it's, Ali, I'm curious for you, right? Because you guys are in Islamabad, Bindi, which are Islamabad specifically, we know this, right? It's a city that has, it's much more similar to Karachi, and Pakistan. Tayo is much more similar to Lagos. But Islamabad, they're very planned out, like roads are much better. So I'm curious for you, Ali, like for you guys, what is that growth vision look like for you? And thinking about growing to new cities, what would have to be in place in order for you to make that call and that decision?
Yeah, I think as Tayo mentioned, being in the third world, you've got to recognize that the challenges are tenfold. And especially as you mentioned, Islamabad has a much better road infrastructure as compared to Lahore, and Karachi is just terrible then. What you don't want to do, the last thing you want to do is deploy a bike in, say, Karachi and it starts failing. It's hardware, you can't really recall them. It's very different from what I used to do with software. We put out buggy software and then fix it overnight. Can't do that with hardware. And we've seen companies that have closed down because they built a poor brand and their brand is associated with poor quality. But saying that, we obviously want to grow out of Islamabad and out of India. And hopefully later this year, we want to go to Lahore, which is, again, much bigger city. And then eventually, I think, in time in Karachi as well. So those are our growth plans, but we recognize there's got to be like a natural transition to these cities, because what you don't want to do is move to a city when you're not ready. And you don't have a product that's going to work on those roads. I think we'll figure that out pretty quickly because our current product would work on those roads, and Lahore for sure. But then you've got to set up the infrastructure as well. So it's like a chicken and egg. So you've got to have the infra first. Once you have the swapping network, then you can start deploying bikes in that city as well.
And I think ultimately, when we talk about your impact on mobility, there's real people here, right? In terms of the riders and the drivers that you guys are impacting with this. And I'd love for you both to talk about the impact that you're seeing on the drivers that you guys work with. Can you share, maybe both of you, share a story about a driver that you've come across where that really has impacted their lives? And Ali, I know that for you guys, it's been through these B2B partnerships that you're able to access it. But maybe, Tayo, if you want to go first in terms of the impact that you're seeing on people right? Of the people that are being impacted here that are using the bikes and being financed by you.
Yeah, I mean that's really why we started Max in the first instance, and it's where we experience challenges or frustrations. Right, the one thing that continues to inspire us is the impact that the work that we're doing is having on the people that we serve. Historically, we've onboarded about 50,000 mobility entrepreneurs or grid drivers, right? And increasingly, we are seeing many more of them are being female or being women. And that's particularly exciting because in Nigeria and in most parts of Africa, the mobility industry or working as a gig driver, a taxi driver, historically was extremely male dominated. I'm 99.999%. And the reason for that historically wasn't really just because it's not because women don't know how to drive or don't want to make money from using vehicles to do deliveries and so on. It's because the industry was so fragmented and so informal and pretty much essentially run by the mafia, right? So it was pretty rough. And it wasn't necessarily the top 10 options for the average woman out there because things like violence were quite common and, all the stuff that the mafia does. So the work that we've done has taken out all of that opaqueness, has brought in transparency, standardization, technology, and predictability as well. And that in itself has then made it very easy, right, for women in these communities that we're present in to go through our process and come on board as mobility entrepreneurs. One particularly exciting story for me was a lady we onboarded who had 3 children and had just recently lost her husband. And she was doing like petty trading, which earned her like really small amounts of money. And therefore she couldn't keep the kids in school. She had to take the kids out of school. Then she heard about Max through a referral. And then she came in to do the test. We have a test that they have to take before they come on board. She passed. And she was shocked when she learned that she didn't need to come up with any down payment to get access to the vehicle. And she subscribed to a 3-wheeler on our platform and started operating on one of our routes, and her income literally went up 10x overnight. She was able to get all her kids back to school, or she was able to become a substantive, capable breadwinner for her family. And I could go on and on with similar stories like that. But that really is why we started Max in the first
Why
instance.
you do what you do. Yeah, exactly.
It's super inspiring, yeah.
What about you, Ali?
The drivers we work with have been at the heart of how we've shaped our approach to EVs. So when we first started, we assumed that the cost savings would be the biggest motivator for any driver. However, what we didn't fully realize at that point was just how transformative those savings could be in a driver's daily life. As an example, there's this lady in Lahore who travels 60 kilometers a day to get to work and back home. And this is a journey she previously had to make using taxis, which, as you know, are very expensive and can be very unreliable in Pakistan. About a year ago, she moved to ezBike and now she commutes independently. She's no longer relying on anyone else to get to work and she's spending a fraction of the cost. And in a country like Pakistan, where mobility for women is often limited, her stories really stayed with me. It's a really powerful reminder on how access to affordable and reliable transportation can unlock not just savings, but freedom and opportunity. It's stories like this lady's and so many others that are shaping the way we grow. Every rider shares with us real-time feedback, whether it's about bike performance, battery range, road conditions, or any other day-to-day challenges. And this insight really helps us uncover pain points and opportunities that I believe that data alone would not reveal. At the end of the day, I don't see these riders just as customers. I believe these are co-creators in our journey and, partners in building a far more inclusive and accessible and sustainable EV ecosystem.
Great. Thank you guys so much for being part of my very first episode. I really appreciate it and excited to share your journeys with our audience. Thank you. Hey everyone, we're calling this segment Investor Insights, in which I sit down with the investors in the companies that we're talking about and highlighting on each episode. We'll cover the market opportunity, the challenges, and also delve into why we invested in these deals. With me today, I have Brian Waswani Odhiambo, who is a partner at Novastar Ventures, a fund investing in companies across Africa. Novastar invested in Max during their 2019 Series A round, and he's currently a board member of the company. As an early investor in ezBike in Pakistan, i.e. the other company that we highlight in this episode, I'll also be sharing how we, Adetayo Ventures, looked at that deal and the market opportunity for EV mobility in Pakistan. So Brian, welcome. Thanks so much for joining me today.
Thanks for having me.
Yeah.
Good to be here.
So I wanted to first ask you a little bit about the why, right? So Novastar invested in Max during their 2019 Series A round, as I mentioned, and you're currently a board member. But at the time when we spoke about this before, you mentioned that Max wasn't even considering the EV route and they were just a mobility play. Can you share more about why you invested in the company, their evolution to EV, and why you continue to be bullish on them and their play right now?
Yeah, sure. I'm happy to. So we invested in Max because we believed that distribution was going to be a big part of getting motorcycles, those two-wheelers and tricycles, tuk-tuks in East Africa at the time, to the people who need them the most, particularly the mobility entrepreneurs. And so there's a lot of options from an OEM perspective. I think there's a lot of Indian companies coming in, Chinese bikes coming in, Bajaj TVS, Shinrei, you name it. But the challenge was actually affordability. And Max was the one company. And at the time I personally looked at all companies doing any sort of two-wheeler play in Africa, whether it was ride hailing, financing, you name it, OEMs, assembly, etc. And Max was the one company that had actually, from our perspective, nailed it, in the sense that they were focusing on the drivers, on the mobility entrepreneurs, the champions, the Max champions, as they call them, and trying to make sure they designed a product that was all like a fit for purpose for them, for their use case. That was affordability, insurance, accident, emergency response, trainings, building a community around the drivers. When you see someone on the roadside who's had an accident or an issue, if you see them with a Max, the yellow Max bike, you'd stop and help them out. And also government partnerships, because obviously a lot of these people face a lot of harassment from government officials, from the police on the road. So Max had thought about that pretty comprehensively in a way that we didn't see with others. And then on the flip side, with the customers at the time, actually, Max also had a ride-hailing app. And so they were doing both ride-hailing and the driver financing. But it actually just happened that the market evolved in such a way that there were so many bikes everywhere. You could just hail a bike on the roadside. You actually didn't need an app. And actually in Africa, you don't really need to order a bike on an app. But then because they had the driver side as well, it made sense. They just focused and shifted the business to a side. And so from a product, not from a product, from a kind of a platform play is how we thought about it. You could think about Max as sort of scaffolding, and then you could hang different sort of products off of, but at the time it was ICE and now EVs, because it's the same people using them, just a different product. And so the company can position itself just slightly differently, but be able to serve the same people.
And what for you, obviously EV wasn't the play before, but what caused the shift for them for EV, and why, from a perspective of like West Africa and EV, why is that something that you're bullish on right now? Besides the fact that you're bullish on Max and their platform play.
Yeah. The other thing is just the market has evolved significantly. In Nigeria, the fuel subsidy going away was a big part of the incentive for Max to get into the EV space. I think in some places like Ghana, fuel prices were high, but just because the largest city, Accra in Ghana, doesn't really allow people to be carried on two-wheelers, like people transporting like commuters. So you move mostly packages. Typically, we've seen package deliveries, not really a big business necessarily. It requires quite substantial scale, and it's a price taker's market. But in Nigeria, you have 12 cities with over 1 million people. And that in most of the cities except Lagos allow two-wheelers to move people around, people and things, and three-wheelers as well. And so as soon as the subsidy went away, Nigeria suddenly became a massive market opportunity for the business. And so it made sense for EVs to play. And then it makes commercial sense for the operator as well to have an electric vehicle because of maintenance being low, fewer parts, all the reasons why we love EVs. And then it just happens that the timing is great because also the world is suddenly paying more attention to.
Yeah, all of a
to
sudden
climate.
it's sexy to be an EV play.
Yeah.
Go ahead.
No,
Share a
that
little
was it,
bit
yeah.
about, I think there's a lot of similarities, Baksan's behind where you guys are in Africa, but specifically West Africa, when you were talking about when we invested in ezBike. So I've known the founders of ezBike for years, actually, before we invested. So I'm the founder of our sister company, which has an accelerator program. Their original play was a mobility play. It was like an inner city ride hailing play. And they were part of our accelerator program. Right then was when our fund was starting. And so I was wearing both hats. So got to know the founders really well, liked the play. But for us, honestly, mobility, given how Careem, which was the Uber competitor that was then acquired by Uber, just how prolific and ubiquitous they were, it just didn't really make sense for us to invest in that play. But we kept following them because we love the founders. They've also known each other since they were kids. And I also love that Max founders have known each other since they were at MIT together. So cool that when you meet founders that have that great dynamic. We did end up investing in mid 2021 because of the pandemic. Basically, they pivoted their business. And so they always knew they wanted to go into EVs, but the time seemed right for Baksan with like fuel prices going up, with the pandemic, like people didn't want to get into a car with other people and all of that stuff. And so they actually first started an electric moped sharing service, which was interesting. And we invested at that time because of the founders. First of all, we liked the unit economics at the time of micromobility. My perspective has since shifted. And I think that's also the beauty of early investors is like you constantly shift as your market shifts. Mm-hmm. But we were also excited about the EV opportunity and their first mover advantage. But then they've also similar like to you guys, like they've shifted significantly. So they realized with the moped sharing is that the asset obviously loses value. You would see the mopeds lying on the side on the street. And so they were like, there's something that we need to go deeper into here. And we love that they were constantly making the bikes localized for the roads and Baksan, constantly iterating on that. And so we did a follow-on in 2023 when they became strictly, basically, even though the sharing business was still doing well. I think they did about 115,000 users, customer repeat ratio of 85%. But from a long-term scalability perspective, it just wasn't something that we saw scale and shifted into, in 2023 when we invested, they had shifted fully into something that was similar to Max, which was becoming an ecosystem player in the electric two-wheeler space. And basically, they've launched electric scooters for sale. They have a network of battery swapping stations, have a B2B partnerships like with major logistics players. So a lot of similarities to Max. Some of it's different, but it's interesting just the evolution of both those deals. And in terms of you invest in the founders and like how they're executing, but you also watch as the market kind of changes and unfolds. And in fact, some is at that right stage of disruption, but we'll talk a little bit more about the challenges that kind of is preventing that. And that's also going to lead to my second question for you, which is the EV mobility sector in Africa overall is quite diverse because I feel like it's not every different regions, different countries are slightly different with their strategies and their policies. How are you seeing this play out in West Africa? You addressed this a little bit already. Obviously, Novastar also invested in Basico in the electric bus company in East Africa. And obviously, a lot of people say that East Africa is leading the EV mobility revolution in the continent. So just curious how you're seeing both play out in different regions right now.
Yeah, I think in East Africa, the president took a very deliberate decision to want to position Kenya as a leader in the climate change. Yeah, the climate change movement, right? Or anti-climate change movement, let me say. And so from a policy perspective, there's been a lot more concessions or things that are being set up to allow or enable companies to scale quickly in Kenya. And I think other countries in Africa are yet to catch up to that. Increasingly, you're seeing more and more of them get there, but West Africa in particular has not necessarily moved into in that direction as quickly. And in Kenya, I think a lot of, and also the other thing in Kenya is 90% of the power is renewable. So actually it makes sense to charge your electric bike because from a supply or value chain perspective, like it's all sustainable. Whereas in Nigeria, we have a big energy problem and lots of diesel generators. And even from a sustainability perspective, we'd probably be charging our EVs with diesel generators, which is counterintuitive, right? But that's changing quite a bit because a lot of renewable energy players are coming into Nigeria. The government has been very deliberate about trying to make the ecosystem really great for many great players to come and play. Huge funding has come into the country from World Bank and so on to subsidize many good players. And then what that does is then unlocks the EV opportunity, because the biggest challenge is infrastructure, right? It's the charging and the swapping. And the big question, the million-dollar question literally that everyone is asking is, who's going to build the charging stations? Or is who's going to build the swapping stations for two-wheelers especially, or the charging infrastructure for people to be able to charge at home? And honestly, we're still early in that kind of life cycle. So we'll see. So far, most OEMs are coming in offering to build the infra, but they're not able to do it as fast as the people distributing the vehicles are able to scale. And so you need some sort of blended place. You're going to see some sort of specialization in East Africa from like people now like Ampersand focusing just on the energy part. You're beginning to see like Spyro, which is focusing on the OEM side, and like Mkopa Mobility focusing on or Green Wheels focusing on the financing side. So the differentiation is coming through in East Africa, I think, because it's maturing a little bit, but in West Africa, it's still very integrated.
Yeah, and it's such a chicken before the egg problem, right? It's like you have to, I feel like everyone in these markets, especially markets like ours, are constantly like literally and figuratively building the road in front of them. And I think oftentimes the players that are supposed to be just focused on like the actual two-wheelers are also working to build road swapping stations. And it's like everyone is just constantly trying to build everything, which is not also the right way in my mind. The ideal situation would be that you have a bunch of different ecosystem players like building across. You have a government that is really pushing, even from a public good perspective, similar to what we've seen in India, right? Where you've seen like really that top down. And I think in Pakistan, it is like they're saying all the right things. And so when you look at, I mean, for Pakistan, it's like the opportunity is pretty obvious. It's the 6th largest market in terms of motorcycle ownership in the world. In terms of, I think I've seen different numbers out there, but 17.5 million motorbikes on the road, obviously with rising fuel prices. Just the need overall is huge. And then also from a top perspective, the government has said that they want to achieve 30% EV penetration for new vehicle sales by 2030. The EV market is supposed to project to grow by over 80% by the end of 2026. So like people are making these like very tall claims and projections, but then the how to me is sometimes not always clear, right? We're like, how are we going to achieve that? What are we doing? If you're allowing Chinese products to flood the market, what are you doing to allow and create incentives for local players to really come up? What are you doing to like make sure that battery swapping stations are interoperable so all these players can actually be serviced rather than just like that one-to-one style approach? And I'm curious for you in terms of, for all of us, mobility is the inevitability. Like we know this is what's going to happen, but there's so many blockers to all of that to the point of how. And I'm curious, like for you with Max operating West Africa and starting from Nigeria, but going elsewhere, which in itself is challenging, right? Because every city, every country has like a different style of approach that you have to do. I'm curious, like, what do you think the biggest challenges right now are for growth in this space?
I think there's a couple of things, actually, more than two. One is going to be behavior change, which is the biggest one, right? And I don't think that people will be willing to completely change their behavior unless the economic incentive is massive. And in Africa and like in like Asia or Southeast Asia, most bikes are either used to move people, like they're mostly income generating, right? So they're not for personal mobility really. And unless it makes business sense for someone, they will never want to suddenly go out of their way to go to a battery swapping station that's not in their normal like route to just so that they can be like electric, right? It has to make economic sense. And so the onus is on the OEMs, the people doing the financing to make sure, which is why you're seeing a lot of swapping stations be at gas stations, because it should be normal life to just go swap somewhere. So I think behavior change is one, just getting people to want to switch. Two is the economic incentive, which I alluded to as well. And three is affordability of bikes or vehicles. Today, the price points are still high. The thing that I'm seeing in the African ecosystem with EVs and that Max is getting better at is people think that EV companies are competing against other EV companies, but actually they're competing against ICE companies. Like,
100%. Yeah.
you need to be cheaper or the same price as an ice bike. Otherwise,
Yeah.
it doesn't
And
matter.
even if you're the same price as an ice bike, because of all the other behavior change elements that you talked about, it's like, why should someone have to shift to EV for it to make sense?
Exactly. And so we see, and unfortunately, obviously, particularly people on the OEM side, because the larger guys, the Bajajs and the TVSs, are just beginning to scale up in this space. And you're seeing, particularly in Asia, that they're beginning to roll out a lot of products. In Africa, we're not. It's still very niche, like VC-backed OEMs, which in itself is a little bit counterintuitive anyway. But you're seeing all of these kind of sort of companies that will need to raise a lot of money to build factories, build lines, the supply chain, you name it, to then compete with people at the scale of Charger, TVS, who already have that, right? And have those sorts of efficiencies, which is why, but it's possible, right? Like we see in Africa, we see Spyro, the bikes are the cheapest in the market. They're getting close to ice bike prices, and that they're dominating some of the space, and Max works with them because of that.
Yeah.
So, but I think we'll get there. It's just a matter of time.
And just for the listeners, clarifying, because ICE is internal combustion engine. It's like the traditional style bikes, and then, or bikes that aren't EV basically. And then OEM, I realize like we're using buzzwords that if you know the space, but OEM is original equipment manufacturer. So just so people know that. It's interesting because a lot of the challenges that you just mentioned, really similar challenges in Pakistan. One thing that I would note, because obviously, Max has raised a lot of capital. Actually, a lot of the players in Africa have been able to raise, probably for you guys, not a lot of capital, but for comparatively to Pakistan, it is a lot of capital. And I would say, just given what you just said, Brian, that you need a lot of capital for this space to really take off. And I think that, to me, is the biggest challenge in the Pakistan market, is the capital scarcity that exists, right? So even when I've spoken to players, even East African EV players, I think one question that I was asked is like, why aren't there more bikes on the road? And I was like, there's not enough capital to put out. It's like, you need working capital, and it's not just like VC style capital. It's like, you need different types of financing to exist in order for this space to really take off. And I think that's even what you were talking about earlier, like even blended approaches, blended finance approaches, like all of those things I think are really necessary. And as much as it's great if the government is behind it, like the government can play a role in also thinking about, first of all, ways to make it economical for people to do it. So thinking about subsidies, but then also from the perspective of, can the government invest in some of the infrastructure that we talked about? Can we do all of the things that are necessary in order for this space to take off? Cool. Thank you so much for joining for this segment. It was really informative and also just so interesting to hear how similar our markets are.
No, that's great. Thank you for having me, and definitely learned a lot as well from your experiences in Pakistan. And looking forward to hopefully building more synergies across the regions. There's lots to learn from each other, it sounds like.
Yeah. Thank you, Brian.
Absolutely.
That's it for our first episode of The Comparable. Thanks for listening, and stay tuned for more episodes that dive deep into different sectors in emerging markets, looking at companies side by side in different geographies. In our next episode, we'll be going to Vietnam and Mexico, talking to 2 digital bank startups in both of those markets. See you next time. Bye.